Are we finally witnessing the end of hyper aggressive price war that have crushed the electric vehicle margin for years? Or is this just the calm before the next storm? And more importantly, for your portfolio, has NIO finally cracked the code to delivering premium tech without sacrificing its bottom line? Let's find it out. What you're looking at right now is critical strategic revelation directly from NIO co-founder and president Kinley Horn, discussing the brand new Onvo L80 flagship 5-seat SUV. This single statement marks a massive fundamental shift in how NIO is running its business, moving away from grand narrative and entering a highly disciplined profit focused execution phase. For a long time, the bear case against NIO was that they were burning too much cash on upfront assets. But look at the wording here. Kinley Hong explicitly noted that the expected gross profit margin for the L80 will meet their strict corporate requirements. It won't be exceptionally high, but it is entirely in line with the expectations. He acknowledged that while a friend told him the price wasn't surprising enough, the company fundamentals still needs to make profit. This is a massive win for shareholders because it proves management is no longer willing to sacrifice financial health just to buy temporary volume. Notice how he explained the exact positioning of the L80. It sits right in the middle of Onvo series, with 3-row L90 above it and highly popular L60 below it. This is a textbook execution of a flagship twin lineup strategy, where the L80 shares the exact same 900-volt high efficiency platform, dimension, and core technology as the L90, but adapt it into a massive 5-seater configuration to target a completely different, highly lucrative consumer segment. Kinley Horn states that they couldn't launch with an exceptionally high and then suddenly drop it by tens of thousands of yuan because that will ruin brand equity and destroy residual value. At the same time, with L with the premium L90 priced above it and the mass market L60 below it, they optimized the configuration to offer maximum standard features within a highly calculated price range. They are being completely rational, pursuing product leadership while defending their margins from day one. From an investment perspective, this disciplined pricing framework is exactly why NIO's financial trajectory has completely flipped. Remember, NIO just achieved its first ever quarterly operating profit in the final quarter of 2025, with vehicle gross margin climbing to a solid 18.1%. By launching the Onvo L80 structured protected margins, they are ensuring that rapidly growing sales volume convert directly into the bottom line net profit. They aren't trying to capture headlines with unsustainable low prices. They are building a sustainable, profitable automotive powerhouse with the high-end trims of the L80 featuring NIO's in-house developed Shenzi NX9031 chip and the groundbreaking NIO's world model driving architecture. They are offering elite premium technology while keeping production highly cost effective. This level of operational discipline changes everything for the stock. NIO is successfully transitioning from an early stage high burn startup into a mature multi brand EV giant that can scale volume across different price points while consistently generating returns for the investors. By defending their gross margins on the mainstream products like the Onvo L80, NIO is setting itself up for a full year profitability through 2026 and beyond. For patient investors who recognize the value of NIO's massive infrastructure, the era of storytelling is officially over and the era of real scale profitability has arrived. So prepare now. With that said, thank you so much for being here. See you next one.